How does Trump's tax policy affect us? I want to know what income levels are paying less in taxes, and are any income levels actually paying more in taxes? What are the new tax policies that Trump brings to the table in 2025, and what's the actual dollar difference that we're going to experience? So grab a drink, take a seat, let's talk about it. Trump's first addition to the Tax Cuts and Jobs Act of 2017 is to remove the SALT cap. SALT stands for state and local taxes. Currently, there is a cap at $10,000. You cannot deduct more than $10,000 to reduce your taxes. He wants to get rid of that. Now, most people do not have $10,000 worth of state and local taxes. And on top of that, you would have to itemize your deductions. When you're paying taxes, normally, most people use the standard deduction, which is nearly $15,000. So for itemized deductions to make sense, you have to have at least $15,000 in qualified expenses. I do not. I always use the standard deduction, so this one would not affect me personally. The next thing that Trump is bringing back is bonus depreciation. In 2018, he set bonus depreciation to 100%, and then it has been dropping by 20% every year. He wants to bump this back up to 100%. This bonus depreciation would allow businesses to depreciate 100% of their equipment or tools or property. That way they can get access to that tax savings much faster. They do not have to amortize it. Amortization is basically just spreading out your depreciation over many, many years. Trump also wants to add back in research and development expensing. Normally, research and development also has to be amortized over 5 years. Giving businesses the ability to expense all of it up front gives them access to that money sooner, which is good for businesses. Trump also wants to reinstate the domestic production activities deduction. That's a mouthful. PDAD for short. No, DPAD. DPAD for short. Currently, the corporate effective tax rate is 28.5%. Trump wants to reduce that to 15% for companies that have domestic production. That's awesome, but none of the business tax breaks are going to affect me personally. Maybe someday my wife and I will be able to deduct some of our equipment for YouTube if we monetize, but for now, that's not the case. Trump also wants to initiate 3 new exemptions for income tax. He wants to exempt tips from taxes, overtime work, and Social Security benefits. Unfortunately, once again, I'm missing out on all 3 of these, but we'll get into the specifics on those later. He also wants to create an itemized deduction for auto loans. Again, I don't have an auto loan, and I don't itemize my deductions. So once again, I'm missing out on this one. And finally, Trump wants to implement a tax credit for family caregivers. This would be good for you if you're taking care of a loved one or a parent. Generally speaking, the bonus depreciation, the research and development, and the domestic production tax cut will all benefit businesses. The itemized deductions for the car loans and the SALT cap removal will benefit higher income earners. The Social Security income tax break will help people who are old enough to take Social Security benefits, and that one also benefits people in the upper income level brackets. This chart shows the percentage of people who itemize their deductions by income bracket. So for instance, if you make between $50,000 and $100,000, there's only an 11% chance that you're going to benefit from itemizing your deductions. Whereas if you're making over $500,000, there's a 64% chance that you'll benefit from itemizing your deductions. So this one is clearly skewed towards the upper income earners. All of these tax cuts are great, but is it too good to be true? How is Donald Trump paying for all these tax cuts? If the federal government is getting less revenue in the terms of taxes, are they getting to make up for it anywhere else? Turns out the answer is yes. Donald Trump wants to implement sweeping tariffs. Specifically, he wants to put up to 20% tariff on goods coming in from all countries, 60% tariff on goods coming in from China, and a 200% tariff on certain vehicles, mainly EVs. So how does this affect me in terms of actual dollars? First of all, there has been some confusion around how tariffs actually work. For instance, if you love avocados, you should know that most avocados are actually imported from Mexico. If Trump puts a 20% tariff on all goods coming in from other countries, then Walmart or Costco or whoever's buying avocados from Mexico has to pay a 20% tax to the US government. Then Walmart is going to turn around and charge the consumer 20% more for the same avocado if they want to keep the same profit margin. Consumers are the ones who bear the brunt of tariffs. Mexico doesn't pay the tariffs. The company who buys the goods does pay the tariff, but then they go and they pass that cost on to the consumer. And this goes for all goods. This goes for cars, electronics, clothes, groceries. and so much more. This is the primary way that tariffs will affect us, the consumers. The cost of all imported goods to the United States will instantly get more expensive. On the whole, Trump's tariffs will have a negative impact on all income levels, with the lowest income levels being the most affected. This chart right here shows a breakdown based on your after-tax income, how much less you can expect from the tariffs. Now, this does not take into account the other income tax reductions. So the bottom 20% of people can expect over 4% reduction in their after-tax income because they're going to be spending more on goods. With the top 1% being affected the least, they're only going to be losing less than 1% of their after-tax income. The top 1% are mainly the owners and investors in the United States, and they are not going to be impacted as much because places like Costco and Walmart are going to raise their prices. It's going to increase their profits. And so they are somewhat insulated from the cost of goods. Taking the upsides from the tax cuts on one hand and the downsides of the tariffs on the other, who's going to be a net benefiter and who's going to be a net loser from these two policies? There's a couple different ways we can analyze this. First, we can look at average income levels and how they are affected on the whole. So this chart right here shows exactly that. There are two bars here. The dark blue shows the immediate effect in 2025, and the light blue shows the long-term effect 10 years out in 2034. So in 2025, across the board, everybody is a net loser. The tariffs are going to have a bigger negative effect than the positive effect of the tax cuts. The biggest effect being at the lowest end of the income bracket. 0 to 20% quintile is losing 2.6% of their after-tax income after accounting for both the tariffs and the tax cuts. The smallest effect being between 80 and 90% on the upper end of income earners. Now, in the long term, most income groups are going to be a net benefit. However, from 0 to 40%, the bottom two quintiles will still be losing out because the lower end income brackets are affected most by tariffs. The second way to break this down is on a more granular level. Certain professions will benefit much more than others with Trump's tax policies. So for instance, if you're taking care of a loved one or a parent, you might get the family care credit. Now, there's no specific numbers out on this one yet, but if we look at the Credit for Caring Act, which was put forth in the past, and we use that as a guide, the credit there was $5,000. So if you got a $5,000 credit, if you're making $50,000 a year, this is more than a 10% boost on your after-tax income. This would way more than make up for the extra costs from tariffs. Next, if you're in the group of people that are drawing on Social Security, you would get a benefit, but only above a certain threshold. If you are getting less than $35,000 in income per year, then you're not going to get any benefit from this because you're already not taxed on your Social Security. Between $35,000 and $60,000 per year, you're taxed very little. Most people would get less than $100 in tax benefit. The real winners from the Social Security tax exemption are people making more than $65,000 per year. And this chart shows that really well. The lowest and second lowest quintiles of earners are making almost nothing, while the middle and fourth quintiles are getting a little over 0.75% boost to their income. So it's not a huge boost, and it's really only geared towards the upper half of earners. The biggest winners from Trump's tax credit, though, is going to be the service industry workers. If tips are exempt, this could be a massive boost to their income. Let's say somebody's making $60,000 per year and half of that is in tips. This means that they are going to be paying almost $7,000 less in taxes every year. Now, that is significant. Of course, that is assuming that they were paying all of their taxes on tips previously. So people who are working overtime are also going to get a benefit. And this is just going to benefit people more the more you work overtime. Obviously, businesses are going to benefit quite a bit from Trump's tax policy. I'm not even going to try to quantify that though, because it's going to vary so much depending on your research and development budget, how much depreciation you can capture, etc. Finally, removing the SALT cap has the potential to be a really big tax exemption. However, this is only going to affect people who have a lot of state and local taxes and are able to itemize. So this is going to primarily be pointed towards upper income earners. If you are in one of these categories, you can expect to hold on to way more money every year. However, how are you going to invest that money? Now that Trump is the president, the investing landscape has changed quite a bit. Check out this video right here to see how I'm investing my money in 2025 now that I know Trump is the president.